Just a fascinating 24 hours looking at the opening remarks here in Davos from President Sarkozy of France, and then overnight President Obama, the State of the Union, both focusing keenly on financial reform around the world. President Sarkozy saying we can't leave this world to our children, calling it irresponsible if we do not change the system. What do you think needs to change within the system? I know you don't support a reenactment of a partial Glass-Steagall.
Well, I think very few people do. In fact, I haven't heard any credible even description of what Glass-Steagall means. I think financial reform is very important. Financial regulation is very important. It's both the responsibility and obligation of bankers to be a part of that. And I think, the meetings in Ball over the last couple of weeks with the central banks, with the regulators, with bankers from all of the key countries from the G20 was important. I think here at Davos, it's important that we work together, and we want a safer and sounder financial system. And I think we've moved strongly in that direction with higher capital levels and less leverage. But we also want banks that can take risk and can help create jobs and create economic growth.
Let's stick on that point. We want banks that can take risk. That is exactly the opposite of what we're hearing from the populist majority right now, and frankly, what we're hearing from world leaders right now. They do not believe that banks that are consumer-oriented banks, at least, should be taking risk.
Without risk, we don't have banks. And without banks that can take risk, we don't have economic growth and we don't have job creation. I think,
So is there a lack of understanding?
Certainly there is some lack of understanding. And I think, if you think about the free trade initiatives over the last 10, 20, and 30 years, if you look at the growth of the economies outside the OECD, if you look at the progress, economic progress that as Americans we've all hoped for since we were kids, it's been very, very positive, and it's been driven by banks that are able to help their clients, customers, corporations, governments, and pension funds manage cross-border risks and be able to transfer capital across border. That can't happen without taking risk. And I think where the regulators are is let's be tighter in terms of the capital requirements. And the banks get it. And I think this is the important thing. Using Barclays as an example, since this crisis began, our core equity is now closer to 9% than 4.5%. Our leverage is reduced from the high 30s to the very low 20s. I think it's important to understand that we do agree that we need change. What we shouldn't do, though, is we shouldn't allow each nation in isolation to drive this change and to drive the rules, because then you get a regulatory arbitrage, which created many of the issues that we saw during this crisis.
Obviously, Barclays based in London, but does business around the world. Would it be a mistake for the U.S. government to enact stricter regulations at this time without coordinating with world governments?
Well, I feel very strongly that working through the G20 framework for the U.S., for the U.K., and for all of the major economies is an opportunity we've never had before. We need globally integrated regulation. And we want to avoid the kind of regulatory arbitrage that allowed, AIG, for example, to be running massive risk in a subsidiary that was unregulated.
Books, yeah.
Or Fannie Mae and Freddie Mac. I mean, how many Americans understand what the original charter was?
Few.
To provide affordable mortgages in standardized form for middle-class Americans. But because they were able to arbitrage regulation, they built massive risk and massive derivative books. And those are the things that we can't allow to happen again.
I want to turn to compensation. It's something the president hit on in his State of the Union in terms of talking about bank tax versus bonuses. You have been very outspoken on the compensation front. Your take right now, Sheila Bair, the head of the FDIC, the top regulator of banks in the United States, said it's just inappropriate to see these outsized bonuses.
We immediately, and I think sometimes this isn't understood, when the G20 and the Financial Stability Board and the FSA all came out with guidelines around compensation, we immediately and probably first supported those. We believe that compensation should be responsible, and that's our obligation.
Is it right now at the major banks around the world? Is it responsible?
I think we're finding out as we go through the process of the year end, and we don't have a lot of facts right now, but do I believe that the major banks understand the kind of feedback that we're getting, and that those banks are working very much in support of the G20 principles around pay for performance, not pay for failure, around longer periods of deferral, absolutely.
Okay, thank you so much, Bob Diamond. Appreciate your time.